Brings us to the fourth headline today. Zomato was up in today's trading session. The company has changed its delivery partners' payment structure after delivery partners paid some protests. The food delivery platform has also clarified that most of its stores are now operational. Mangalam joins us to give us a quick analysis on that. Mangalam.
Well, Zomato is doing well in today's trading session, mainly because the company has now officially recognized that it's made changes to its payout structure for delivery partners of Blinkit. Remember, the last couple of days, there were a bunch of delivery partners protesting that. I'll talk about more that in just a bit. But the thing is that, because of this, they had to shut down a few of their stores. The company is saying that now all those stores have resumed operations. In their overall scheme of things, this accounts for less than 1% of their revenue, which is why they didn't, have to explain it to the exchanges unless asked. So as a result of which, materiality is very low. Now on to what has changed as far as the payment structure is concerned and why there were protests. So the payment structure for the delivery partners for Blinkit earlier was 25 rupees per delivery flat, and now it's changed to variable 15 rupees plus a percentage basis the distance that the delivery partner travels. So, the delivery partners weren't happy with this because they thought they would get lesser. But ICICI Securities believes that this is a positive for Zomato for a couple of reasons. One, it increases the delivery radius of every dark store. And secondly, helps the company's Blinkit business go ahead and expand its network without any significant capital investment, using the new payout structure itself. So that's a positive for Blinkit. But over and above all these things as well, a lot of brokerages have been sounding positive incrementally on Zomato over the last few trading sessions. In fact, Motilal Oswal recently initiated coverage on the stock, citing good tailwinds for the food delivery industry itself. And as a result of which, the stock doing well today.
All right, Mangalam, thanks a lot for that. Well, Angel One tumbled close to around 3% despite reporting a rather good set of numbers in the fourth quarter. Mr. Dinesh Thakkar, the chairman and MD of the company, said that they are in investment mode. They will focus on market share and not on cost-to-income ratio. Let's hear him out.
We are not focusing more on improvising our cost to revenue ratio, because we want to focus more on market share. So this time it was better because there was one reversal of ESOP cost, which was not a big amount. But primarily what I wanted to say is that we are into kind of an investment mode, where we would be focusing more on getting market share or getting more wallet share from a customer. Impact on our profit and loss would be around 40 crores because we have to raise more capital.
Well, AU Small Finance Bank, it was a little lower in today's trading session, but it had some good news. The RBI gave it its green signal for authorized dealer category 1 license for the bank to deal in foreign exchange. Well, Abhishek joins us to break that down for us. Abhishek?
Well, as you mentioned, AU Small Finance Bank has got the AD1 license, which is authorized dealer category 1 license. So this license allows the bank to deal in foreign exchanges. License will allow bank to serve the needs of their importers and exporters who are the customers of the bank. And also it will provide inward and outward remittance as well. The move also will put the bank almost in par with, universal banks in terms of product offerings. Almost about 90% of the product offerings that Universal Bank does, AU Small Finance Bank can do. So the step is also closer towards getting a universal banking license, and analysts do say that this can add about 35 to 50 basis point to pre-tax ROA from the extra PSL sell down, that is priority sector lending sell down. The move is very good given the fact that last week we had RBI extending the term of the MD of AU Small Finance Bank by 3 years. This, coupled with the AD1 license, does indicate that RBI is comfortable with the recent growth trajectory seen in the bank. Remember that for Q4 business pro forma, we saw loan growth tapering down to about 26% level from 38% that they had in Q3. So good point for AU Small Finance Bank towards becoming a universal bank license, possibly in the future. Back to you.
Thanks a lot for that, Abhishek. Well, let's get some more specific news then. BEML land assets. Well, that was a demerged non-core assets of BEML. It made a weak debut today on Dalal Street. Vivek joins us to run us through a quick analysis about that. Vivek, well, the stock initially opened higher, but then it ended lower. Tell us more. Okay, all right. I think we'll, get to that in just a bit. But that stock, in fact, had a new listing today. It opened higher and then it ended lower. Bit less soft, though. That one was a little bit lower in today's trading session, but we learned from sources that the company is having advanced negotiations with Invacare for recovering its dues. Vivek is now with us. Vivek, tell us about this one, Birlasoft. They could be recovering some of those dues?
In what could spell significant relief to IT company Birlasoft, we understand from our sources that the company is actually in advanced negotiations with Invacare for recovering some of the dues that Invacare owes to Birlasoft. What we understand is that, the company could, number one, recover some of the unpaid pre-bankruptcy dues from Invacare, and we also understand that there could be a one-time settlement amount too that Birlasoft could receive from Invacare. Now remember, despite Invacare actually going ahead and declaring bankruptcy, we understand that at this point of time, Birlasoft continues to provide some of the software services as it's a lights on as far as Invacare is concerned. Now, just for some context, remember, Invacare had signed a 10-year deal with Birlasoft, and the total value of the deal was close to almost $240 million. And when you're talking about the annual contribution, it contributed almost 3 to 4% of Birla's total revenue. So Invacare was an important client as far as Birlasoft was concerned. We reached out to the management of Birlasoft. What they told us was, at this point of time, the Invacare matter is still sub judice, and we have no further comments to offer on this particular development as of now.
Thanks, Vivek, for that. Well, moving to the fifth headline today then. Metal stocks, they were some of the top performers in otherwise volatile market. The metal index closed with 0.5% gains. Metal prices also trade firm on the back of a decline in the US dollar. Aluminium is trading near 6-week highs. Copper as well is near 1-month highs. Manisha Gupta joins us to round up all the metal action today. Manisha?
It's been a good day for the metal prices, where we have seen strength, one, because of the US dollar decline, and second, because the Chinese data continued to be on the stronger side. We were already soaking in the first quarter GDP numbers from China that came in firm. The retail sales and the factory activity also has seen improvement. And on top of that, now the China new car sales gained up by nearly 10% for the month of March on a year-on-year basis. And there has been the China automobile output also gaining by nearly 15%. So that means better demand of metals, and this is a quarter when you also see better construction demand coming in. That's keeping the prices in flavor. So palladium prices are trading at a 2-month highs. You have nickel prices also trading at a multi-week highs. Markets are looking at weaker inventories with LME. That has been a supportive factor as well. So aluminum prices trading at a 6-week highs. We've seen nearly 2.5% of gains in last 2 trading sessions come in for aluminum. Copper is trading at a 1-month highs with inventories at 2005 lows. And then nickel, as I already told you, 7-week highs coming in for that one as well. Zinc is trading at a 2-week highs with LME zinc inventories at lowest since 1989. So various supportive factors which are keeping the metal prices in the positive.
All right, Manisha, but global rice supply as well is set to see its largest ever shortage in 20 years. As per Fitch Solutions, the ongoing Russia-Ukraine war and extreme weather conditions will hurt production of rice, which are driving up prices. Well, Ukraine, remember, is one of the top rice producers in the world. Manisha, what are you tracking in this sector as well? Rice prices moving higher. The stocks are very excited today.
Well, rice clearly has been a story today, especially after the Fitch report that suggested that the global production is going to be the lowest in 20 years. And they also forecasted that the global shortage would be at the tune of 8.7 million tons. That kept the prices higher. And then the street was in any case looking at the previous financial year exports data for India, which shows that there has been a 16% of a jump up in sense of rice exports in value at the tune of $11 billion. The quantum, though, stands at 21 million tons, which is more or less as compared to previous year as well. But it is the value in which the numbers clearly have surged. The expectation, though, is that as we move ahead from here, the exports from India could be lower. If last year was 15 to 20 million tons, this year could be 5 to 10 million tons. Is what the industry tells us. And the demand from China is yet to pick up. South African demand is on the weaker side as well. So while we have seen a blip, a reaction to the report and the last year export numbers, the street believes that the Indian crop is sufficient this time around, and the international demand not so much. So we are looking at a range-bound trend going forward when it comes to rice as a commodity.
All right. Thanks a lot for that, Manisha. Well, on that note, though, we'll have to wrap up on this edition of Markets Today. Thanks so much for watching.